The crushing cost of living is one of the biggest worries across the United Kingdom. Even as inflation cools, everyday expenses from rent, food to transport have stayed painfully high. A recent study shows a family of four now needs around £74,000 of nearly 100,000 US dollars a year just to meet a basic standard of living. Yet the country's average annual salary is around half of that. So what's behind the cost of living disconnect, and what lessons can economies like Taiwan learn from the UK's experience? I'm Devika Paulin, and you're watching Connected on Taiwan Plus. To help us understand the imbalance in the UK economy and society, we're joined by Eric French, the Montague Burton Professor of Labour Economics at the Faculty of Economics at the University of Cambridge. Great to have you on the program.
Great to be here, Divya.
Thank you so much. The UK is a very interesting study. Can you tell us what the conversations about the cost of living right now are in the UK?
Right. So cost of living is on everyone's minds in the UK. Since the COVID pandemic, prices have risen significantly. On the other hand, wages have risen, but actually not quite as fast as prices. So in real terms, earnings are now lower than they were 4 years ago, for example. So for that reason, people are concerned. This has caused a lot of political discussions in terms of how can British productivity improve, how can earnings rise faster than inflation again?
Right. Before we continue, I want to bring in some numbers here. So how much more expensive has life gotten in the UK? Well, according to the UK's Office for National Statistics, year-on-year inflation measured by the Consumer Price Index peaked at 11.1% in October 2022 before easing significantly over the past 2 years. As of August 2025, it stands at around 3.8%. So I'd imagine the pandemic had to do with that spike we saw there in 2022. But it seems the after effects have continued despite the inflation seemingly have come down quite a bit. Can you tell us what's led to many of the prices remaining out of reach for many people?
Right. So the key drivers of high inflation over the last several years in the United Kingdom, first of all, fuel has continued to rise in price relatively fast. Second, food. And then third, mortgage rates have risen. And so that winds up being an extra cost to homeowners who need to refinance.
Well, what would you say is the biggest factor? You talked about fuel, we talked about the effects of the pandemic, but what is it that really is stopping people, or I guess making it much more difficult for people to be able to afford things the way families could, say, 20, 30 years ago?
Right. So I think this is tied into this bigger question of what's sometimes referred to as the productivity puzzle, and that in Britain, as well as in many other European countries and many developed countries around the world, productivity has not grown so quickly, say, over the last 20 years as in previous times. And so for that reason, if productivity doesn't grow, it's hard for wages to grow as well.
Can you explain what you mean by productivity and productivity growing?
Sure. So in the United Kingdom, total output of the whole country used to grow quite rapidly. Over the last few years, or probably more precisely, in the last 20 years, just total output of the whole country has grown at a very sluggish rate, if at all. And so, of course, if the whole size of the pie isn't growing, it's hard for the part of that pie that goes to, say, workers to grow very quickly either.
Going back to the issue facing people every day, the Bank of England has kept interest rates high at the moment just to try and contain inflation. And does it feel like inflation has been contained? And what is the trade-off of keeping the interest rates high?
Right. So as you just showed, inflation rates, they're still above what the Bank of England has as its target rate of 2% for inflation. And so when the Bank of England is thinking about issues such as should interest rates be cut, it has to think about this issue that if inflation rates are still above the target, should it actually cut rates, or does it need to keep rates high to keep the economy a little bit cooler to help inflation fall?
Let's have a look at the situation here in Taiwan, which has yet to see the spikes experienced in the UK. Its year-on-year rate peaked just below 4% in 2022. From this September, it eased to around 1.25%. So what does that mean for the economy here? And are Taiwanese households better off than in the UK? We spoke to Elliot Fan. He's a professor of economics at the National Taiwan University to get his take on it.
Taiwan CPI index is actually underestimated. I said it's underreported because the government used a bias sample to calculate the index. They used 14,000 public housing units and a fixed sample of 12,000 private housing units. And this is not a ideal sample to measure the housing price increase and dynamics. So, according to a thesis, a professional report done by National Taiwan University a couple years ago, that used a sample of over 1 million private housing units to calculate the index. The actual CPI should be roughly 1 percentage point higher than the official figures for the past 20 or 20-something years. So, maybe the gap between the Taiwan CPI and the UK CPI is not as large as widely understood. So, a second thing I want to say is Taiwan's government fancy price control as the primary strategy rather than rate increase. There's a cost. There's a very high cost for taxpayers. Because the government can successfully put price control because the major petrol supplier, the CPC Corporation, and the major electricity supplier in Taiwan, which is Taipower, are both government-owned enterprises. So the government can directly demand them to cut the price and to supply as much as the people want. Putting the price control on petrol and electricity benefit heavy users, right? The benefit heavy users of the petrol and electricity, leading to reverse income redistribution in Taiwan society.
Now, if we look to the UK, there have been a number of relief measures the government has tried to put in, such as energy price caps. Can you talk us through whether those are effective measures and what more needs to be done to make people's lives comfortable?
Right. So, as you noted, there have been a few measures that are tantamount to subsidies for fuel and other items. Overall, these have not had a big impact on inflation overall. And of course, it does get back to the question of who pays for the fuel subsidies. And so at some level, this gets back to, I think, the bigger issue of why are prices rising in Britain, and what is stopping wages from rising faster than prices. And again, this, I think, all gets back to these questions of productivity.
So what would you say is, or who would you say is driving up the prices? And that is the question we ask a lot here in Taiwan, where your average person says that many things are beyond the reach of what their salaries can provide, yet the prices keep rising. So who is it that is, it's the supply and demand question here?
Right. So just in terms of the key items that have increased in price. So one is food. And unfortunately for Britain, Britain is a net importer of food. And so at some level, when the price of food rises, that's good for countries that export to Britain. That's not good for the British themselves. The second important item that's been rising in price is the price of housing. So Taiwan has had big increases in house prices, I guess, over the last 30 years. So has Britain. So what this winds up meaning is that certainly for young homeowners, this winds up being a huge chunk of their expenditures just to afford a mortgage.
Yeah, I'm so glad you brought up housing, and that is going to be the focus of our next session. But before we go to that, a recent BBC report shows that nearly half of UK adults have less than £1,000 in savings. So what does that tell you about household resilience and where the population is heading, especially given the current economic climate we're seeing, given all the geopolitics and uncertainty that surrounds the UK at the moment?
Right. So just when thinking about savings, of course, most British people have resources coming from pensions and the value of their home, things like that. But as you noted, most people don't have too much cash in their bank account. I have to admit for myself, I view myself as doing relatively well. However, like most people, all my wealth is basically in my pension in my house. And beyond that, it's whatever I have in my checking account during the month.
And I guess then before we wrap up this segment, I mean, the question everyone keeps asking is, how sustainable are those pensions? Particularly, as you said, we're seeing dwindling productivity. Do you feel like the pension is going to be the next? I understand it's probably already an issue. What is the conversation happening there?
Right. So around pensions, in terms of private pensions, because they're defined contribution pensions, at some level they're fully funded. There's important questions about retirement savings adequacy. And then the second issue is with government pensions. And just in terms of demographics, of course, Britain is similar to Taiwan and many other countries in that because people aren't having so many kids, the number of future people who will pay for pensions isn't growing nearly as quickly as the number of future pensioners. And so this is also raising important questions about financing living standards of the elderly in the future.